Hello, everybody. I hope you're doing well today. Let me just share my screen here. Second, I'm working off of multiple monitors. There we go. Share. Okay. Should present. All right, perfect. I appreciate you joining in this evening. Um, Second. There we go. Okay. So thank you so much for joining. Today, we are talking about how to talk to a lender or a broker, what to ask for, what to watch for, and without ultimately being sold to, feeling sold to. So, how to talk to a mortgage, a lender. And tonight we're talking about something that people really feel uncomfortable with, which is talking to a lender on the phone. I mean, even in person at the bank, it is nerve-wracking. You have a lot of things going on, and you want to make sure you're getting all your questions answered and all that good stuff. And sometimes you walk away with having those unanswered questions. And yeah, that's totally fine. And always want to follow up and do stuff like that, your due diligence. But I'm here to explain just from my expertise and what I've seen. More importantly, how to do it without feeling pressured, sold to as well. I host these weekly webinars to help you save time, reduce that pressure, and guide. So, have you ever felt like you made a bad financial decision? I know I have. I have definitely felt like I've made a bad financial decision, and I feel like there are a lot of us out there that have. And I'm here to reduce that pressure, save you some time just from what I've seen, and making the best decision at the end of the day. So, we'll go ahead and get started. Why this matters, your experience matters. Lender's job is to evaluate your financial picture and guide you through your options. And but how they do that matters. So before you sign anything, before you commit, it is okay to pause and say, wait, let me ask some more questions. And ultimately, having a really great experience, reading tones, reading body language, if you can do that. If not, just kind of filling it out the conversation and walking away from it, feeling, like you had a really good conversation. That does matter. Okay. What a lender does. A lender's duty is to guide and evaluate. Obviously, there's so many products out there, and each lender has an array of products. Each broker has an array of lenders that have those products, and it is their duty to make sure that it's financially fit, it makes sense with your picture, your plan, your goals, and that does take time. And ultimately, what I have found is that it takes it could take anywhere from a week, a couple days, a week to a month, 2, 3 months to figure out these decisions. And doing due diligence and research does help. But what does not help is when you have that lender or broker that's pressuring you into this decision that you're not comfortable with, or you may have questions about, but not know how to ask them. So there's a lot of things up there. All right. So definitely how they do that and explain and walk you through your options, that does matter. What you should ask for. So you should ask these questions. What am I comfortable with? What can I comfortably afford? What are my options? What does this look like long term? Instead of just asking what you're approved for, ask questions to help you understand that full picture. So, asking those questions in your own words, you can practice these on your own. Obviously, everybody has a different talking method or a different way of talking, especially if you're from a different state or different area, things like that. So, but quietly asking yourself some of these questions does help, figure it into your monthly budget beforehand. See if this is going to make sense. Um, there is a lot of factors. Like I said, we are all on different timelines and to have different things going on at different points in our life. So you could be moving into a new home, you could be moving out of a home, you can have a job change, you can have a marriage, you can have new baby, you can have divorce, you can have elders moving in, elders moving out, maybe you need to accommodate. There's a whole lot of things. And then also payback plans matter too. How are we going to get this thing paid back? We want to make sure our financial picture is very comfortable and looking at the terms, the conditions, and having a plan in place is truly going to help. Retirement. Okay. What to watch for on red flags? What to watch for is pressure. Avoid this. Rushing. Avoid this as well. And avoiding questions. You want to ask those questions, as I mentioned. Asking questions is going to be your bread and your butter. If you don't understand something, ask. And I have been in situations where I have explained the same concept in probably about 2 to 5 different ways to help somebody to understand. And ultimately, sometimes you have to bring in another party to have that conversation make sense to somebody. Whether it be somebody on our end, like the broker or the lender's end, could be their upper line, or like the director, or maybe a colleague, somebody that can explain things a little bit easier. I've had to explain things to clients on behalf of my colleagues because their client did not understand the way they were saying it. So I had to jump in and explain things. Also, too, on your end, too. So, say if you're not understanding something, bringing a different party in, whether it be husband, wife, adult, kid. I've had clients to where I've helped and their children are in the industry and they can talk to me very comfortably and they understand things in a different way because of that. Now, that's not always going to be the case, but you always want to ask those comfortable questions. And if you don't understand, or maybe ask later, or do some research, like here right now, like I'm explaining to you. You can definitely do some pre-research that's out there and kind of figure out some information on your own, without pressure, without being sold to, so you're not steered in a certain direction for sure. Avoid rushing. So if you feel rushed, that's your sign. That pressure, that feeling like, oh, I have to make this move or else I'm gonna miss out. You're not gonna miss out. Rates, they do fluctuate a little bit day by day. Obviously, I'm not a market analyzer or anything like that. Now, you definitely want to speak to a financial advisor, but we can't predict the markets. Now, we see little changes, and I have clients that all the time keep an eye closer on the market than I would. And that's okay. They can do that. Um, just don't feel pressured on things like that. You want to make sure that this is going to make sense with you, your family, your long-term or even short-term goals if you have something going on short-term. You want to be careful with those short-term quick decisions. However, think about this long-term, or if you can give it some time, you can do that too. Obviously, we're all in a pinch sometimes, and I understand that too. Sometimes when push comes to shove, you have to like go and make a move, and I get that. I totally get that. So, whatever works with what you have going on, obviously. Um, but yeah, a good lender won't pressure you into decisions. And also, I come from an environment where it was very highly pressured. It did not feel natural to sell in this manner. And I always guided my clients. My clients always had my phone number and they would come back to me too once they were ready. And I love that. So that worked out really well. So on a personal note there. Okay, some green flags. So another thing to consider is good signs. Good signs. Take your time. Taking time. You should feel guided and not sold to. Explore explains options. So, okay, so exploring options is great. You can definitely explore options because every lender has something different. Brokers are nice to work with because they have a variety of lenders and they tend to know a little bit more because they are well versed on all an array of products with all these lenders. And that's nice too. So if you have a really tricky situation or a different maybe income, debt to income ratio, maybe your income situation's weird or your investor. You can explore options with brokers and they will guide you in the right direction. And what's nice about that is they're able to pick out that lender or maybe look at multiple lenders and products for you versus being stuck with just the one lender that you're working with. So there's a lot out there. There's a ton out there. But exploring your options is great. So you want to make sure you're getting into the best option. But also, not only that, you want somebody that's going to explain options to you too. So, explaining the ins, the outs, the ups, the downs, everything. So, there's good things, and sometimes it's too good to be true. What are my downsides? You have to ask those questions because when something sounds too good to be true, tend to be it like it is. So asking questions is very, very important because you don't want to be stuck in a different financial situation come like a year later, 2 years later, 5, 10 years later, where you're like, oh, I didn't know my product had that feature. Nobody explained that to me. There's a lot of fine print out there. So definitely go through, comb through your contracts too as well. But go with somebody that's going to explain things to you, explain those options, explain terms. I used to go through each and every disclosure with clients and explain exactly what was what meant what, because there are a lot of different verbiage things and stuff like that where you really have to you have to gump it down and make sure that clients understand. And that was always my goal is to make sure you're comfortable in the option and the opportunity and just knowing what's what. And that's going to help you be more knowledgeable in the long run too. I should actually do a webinar on disclosures. Not too sure if I'm able to do that compliance wise, but that wouldn't be a bad idea. Okay, so we'll keep moving along here. Next, how to prepare. So before you call or before you get on the phone with a lender, a broker, first of all, I do want to say, and I didn't really add this in there, when you're having that initial conversation, you want to make sure you have a clear mind. So talking while you're on lunch break, during work, or during your commute to and from work, there's a lot of things that could potentially be on your mind. I know when I am on my way to work, I have to mentally prepare for work. So that is my time to prepare. So I could never get on the phone with somebody, have a really serious conversation like this. So make sure block out some space for some time and at least 20 minutes. I know my conversations are very impactful. I love to get to the point, and they can go anywhere from 15 minutes to 50 minutes or to an hour. It just depends on what we're going through. So set some time aside, at least a good half an hour. And if you do have to go, just politely say, okay, I gotta go now because this and that. And hopefully that person will understand and schedule a call back with you later in going over the rest of your concerns. And that does help gather your thoughts. Sometimes sales, well, decisions, I'll say decisions, they don't always happen on that first call anyways, and they shouldn't because you know what? You need some time to think and like gulp this information in and ask those questions that are going to come up when you are off the phone that you're like, oh, I have this thought, or oh, this somebody told me this and I forgot to mention that. Or maybe there's something you talked about in the opportunity and you're like, wait, so you said this, what did you really mean by it? So there's a lot of things out there. And just, clarify, get as much clarity as you can and set that next appointment up too. That is very, very helpful. But yeah, go ahead and ask some of those questions. So, how to prepare before you call. Know your income. So, knowing what your income is exactly is going to help a lot. So, knowing who you're going to have on the loan, how much income. If you know credit score, that's a bonus. So, credit scores can look different from Credit Karma, the Experian, or the Equifax app. I'm not sure. I think it's Equifax that has the app. Experian may have its own app too. However, I'm not really sure. I know one of them does, and both of them are really, really great. However, sometimes they don't always show the full picture. Like there are different things on your credit report that read out. So just kind of having that knowledge, but having an idea of what that credit score is going to be helpful. Know your debts, know what you have to pay back. So what you have going on right now at a glance. This includes like car loans, auto loans, obviously, if you have boat loans. I've had clients that have boat or RV loans too. If you have a second home or rental property, those are the bigger items, but smaller items too, as far as credit cards, loans, personal, um, things like that, revolving lines, just knowing what your debts are and your monthly payments and everything, because that's going to matter as well. And then also to think about, okay, well, can I pay these things off with the loan I'm getting? And if I can't, do I have a plan in place that's going to help me to pay these things off? You can always look at more income, adding a co-borrower on the loan. Um, kind of looking to see how much you're really comfortable and know you can bring home every month and going forward too. And looking at your job and the career itself, because it's true. AI is coming and there's a ton out there that's automating right now. And I feel like these jobs that, especially with marketing, I can say this myself because I've done a lot with AI that has helped for my personal business. This whole valuable lending, it has helped me. Coding. So there are a lot of things taking over where as they're taking over jobs. It's really sad to say this, but that's in reality what's happening. And what are we going to do? We have to embrace these kinds of changes. So just looking at the long term, do I have room, you know, with your career and everything, a backup plan? Okay, what if A happens? What's my B plan or C plan even? So knowing exactly what's going on. Do I have rooms? Do I have room for that new monthly payment or the replaced payment? Is it going to be comfortable for me? Can I live? So, knowing if you can live comfortably because lifestyle is super important. I know I get my Starbucks every morning. I budget for it and I need my Starbucks, my coffee. It keeps me awake in the morning and it's something that I do look forward to. So, I'd love to have that. And budgeting for that is important, knowing my lifestyle. If you have kids, kids, you go to the store easily asking you, can I have this? Can I have that? Budget for things and just knowing exactly what you need to live. Can I go on this vacation if I take this loan? Am I going to be able to do my travel, money once a year travel, or however many times you like to go on vacation each year? everybody's different. And yeah, I mean, it could even be something else that you like to splurge on too. I know clients like self-care, massages, personal care, things like that that are important. So looking at your lifestyle, saying, okay, these are like my non-negotiables and I need to have money for these is very, very important. Okay. You don't need to be perfect, but having a general idea helps the conversation go smoother. So knowing all this information in the back of your head does help the conversation go smoother, knowing where you're financially at, where you could be, what could happen. Um, you can strengthen your financial position. I talk about that on my other webinar where reducing monthly debt can help strengthen financial position and put you in a better spot too. But it all just depends. You have to be comfortable with the mortgage payment going up a little bit here and there, but sometimes it does make sense. It just depends. How long am I going to be in the home? I could go on with that, but I won't today. So, next slide. Another thing to consider is so what not to do. Avoid rushing, avoid saying yes too quickly. Oftentimes, where I was in a heavy sales environment, I would get that commitment, and I understand that person or party did not want me to maybe feel bad or might have liked what I had to say and agreed at first. But saying yes too quickly can hurt, and things really sound good, still evaluate them. You can say yes initially, but give me a day or 2 days to make sure that I'm committed with this decision. Because the last thing you want is to back out of a loan, be held up with an appraisal fee that you had paid for and maybe had, and then you're not going to go through with the loan after all. So just knowing that like, what risk am I taking? Asking as many questions as possible because sometimes there are situations where you can get blindsided and be paying for something that you don't even know that's going to follow through, and that's very scary. So make sure you do not say yes too quickly. Don't skip any questions. So skipping out on questions. You don't have to decide anything on the first call. Take your time. Okay? Think ahead. Okay, so let's pause here. In closing, you deserve clarity at the end of the day. You owe it to yourself. You deserve that clarity, and this should be an easy process. When I had sold in a high pressures environment, and it was not comfortable. So I had changed the way I approach sales. Now I am very relaxed on the phone. I am very asking questions, and I want to make sure my clients understand what they're getting themselves into before they commit to something. And just knowing the risk, advantages, disadvantages, different products. Sometimes clients don't fit in a box. Loans are like a puzzle piece, and that puzzle can look different for everybody. So having different factors and just knowing like, okay, what's going to fit me at this point in time? And what options do I have? Because there are multiple options out there. So you may qualify for more than one thing or something like that. And you may not think about it, but then when you get the information, you're like, okay, that makes total sense. So I've had situations like that plenty of times where clients will choose plan B, not plan A that we had originally talked about that they thought was the right thing for them. We go with plan B, and that's fine. So in those situations, definitely take your time. You deserve clarity, whatever you need, and you can tell your lender or your broker, like, I'm not ready to make a move right now. Give me a day, give me a week, give me a month. And that is totally fine. I have clients that I check in with monthly, and this is perfect because We get on the phone and it's a quick 5 to 15 minute conversation. And sometimes it's just like, okay, I'm still waiting to do this, or there's a factor underlying that they're waiting on, and that is okay. However, we do go over the risk that they're taking too at the same time, advantages and disadvantages of waiting versus non-waiting. So there are different things. Now, I will go ahead and just run through. This is my payment estimator. I actually created this calculator recently. And this I love because what this does for you is gives you a guesstimation on a new loan. So if you are thinking about doing a refi or maybe moving into a new home, paying off your current home, and want to figure out what that payment's going to look like, you can easily go in here. And I have this on my personal website, sabrinamontalvo.com. You can put in your loan amount, your interest rate, the term, and you can put property taxes, homeowners insurance, and figure out what that monthly payment's going to be. And it'll break everything down for you monthly because taxes, when you escrow, they're broken down on a month-to-month basis. Same thing goes with homeowners insurance. So, after all of this is said and done, you deserve to feel comfortable with the process. Ask questions, take your time, and make sure the decision feels right for you. All right, and that I will go ahead and close that out. I am here for you. So I am here to serve if you have questions about equity. If I'm here to serve with an equity guide, I have a really great guide